Angel investing is an exciting and rewarding way of investing in startups. Imagine being a foundation investor in a technology company that delivers a cure for diabetes. That's a real Australian case right now. Imagine as a shareholder, your advice helps a company succeed with a universal payment system that has all the convenience and security of credit cards and none of the fees. That's an actual angel-backed Australian venture. Imagine you invested in a startup just as it started to generate revenue, and 6 years later, it sold to a global corporate, giving you 10 times your money back. Imagine the fun and satisfaction of mastering the skills of angel investing, then sharing those skills with aspiring angels and as an advisor to startup founders. Angel investing means being a proactive participant in this adventure for a whole bunch of startups. No one has a perfect model to startup success. It is not all about the money, and this should not be your primary wealth generation activity. So why? Why do we need startups? Why invest in startups? Why take the extreme risks? Everyone is looking to radical innovation to lead us out of our troubles and into a better world. Startups are designed to succeed at radical innovation. To offset the risk and high failure rate of startups, you'll need to build a portfolio of at least 10 concurrent investments. A portfolio is important because startup investments are illiquid. You can reasonably expect that at least half of everything you invest in as an angel investor will completely fail to return any cash to you at all. This is all about high risk and high reward. But what rewards should you expect from angel investing? The rewards are certainly financial. However, all the most successful angel investors I know around the world are more focused on other metrics of success. The personal satisfaction of making a contribution to the growth and improvement of our society. Paying it forward by creating new, well-paid jobs within our own community. Plus, there's actually a lot of fun to be had as an angel investor. From the camaraderie of a diverse group of good people with shared values doing good things together, to the simple joy of using what we know to help others create new value. The intellectual challenge of seeing the world differently through the eyes of a visionary founder. The satisfaction of disrupting the status quo to change the world for the better. And the appreciation from the founders for your valued involvement. Still, what about the money? Well, my first angel investment was last century and it delivered a 100 times return. That is, when I sold my shares about 4 years after investing, I received 100 times more money than I invested. My first angel investment this century returned 34 times after 10 years. By comparison, in the noughties, I co-founded one of the best performing VC funds in Australia, and that returned 8 times in 5 years. So every company in which you invest must be exposed to the risk of success. Our job as angels is not to find the reasons why a venture might fail. Any 12-year-old kid can say it will fail and likely be right, since in excess of 75% of all new ventures fail, even more with startups. No, the real art is to see the opportunity for success and a credible path to exit. So who can do this? Who can be an angel investor? Anyone. Anyone with the passion, the time, and a modest financial capacity. Angel investing is for women and for men, young and old. Some will have deep expertise, others extensive experience. Some will bring a fresh perspective, and others a youthful positivity. Many are still working full-time, some have sold their businesses, and others have retired from their primary careers. Most angels are people who have built or are building their own success, which gives them the confidence to guide others. You don't have to wait. Some of the most valuable insights for the best investment decisions come from those angels who are embedded in the relevant markets or customer experiences. You should develop your own angel investment thesis. That's the model of money, timing, sector, opportunity, and engagement that you believe will deliver the best chances of success for you. These are not immutable limits. They provide a guide for good investment discipline. When you join an angel group, At least some of those parameters will be set by the group focus and the group process. So how do you actually do the angel investing? Well, your thesis will help you know what you want. Then you will need a process, a way to source deals in what is a very noisy marketplace. Quickly filter and evaluate those opportunities for a good fit, know what you consider reasonable terms for investment, and have a way to stay engaged. Rule of thumb, you need to touch 50 to 100 initial opportunities to find one that is a right fit for you. The research shows that doing a good job of due diligence before investing and of engagement after investing have the biggest impact on the success of your investments. Now, founders are always eager to move quickly, but beware. Speed is not always your friend when you're trying to validate the opportunity and working to establish a relationship that is likely to last at least 5 years, even longer if it's a huge success. Remember the old saying, act in haste, repent at leisure. On the other hand, taking too long can be just as bad. So can we do this in Australia? Absolutely. A great example from the Melbourne Angels portfolio is Rome to Rio. This company was founded by two very clever young men committed to the idea that they could build in Melbourne a world-leading tech company that would dominate a global market. They did exactly that, defining and dominating the global market segment for multimodal travel planning. And they did it with just 2 early rounds of modest angel investment and a strong focus on over-delivering on their value proposition to their customers. The result is that last November, after 6 years, the company was sold to a German online travel conglomerate for a very satisfying return to the investors, and of course, an even more satisfying return to the founders. But it's better than that. Rome to Rio will continue to operate in Melbourne under its own brand, growing its core business, employing more people, paying local taxes, and enhancing the reputation of Australia. The Melbourne Angels member, who was a director and had served as chairman of Rome to Rio, was encouraged by the acquirer to remain on the board, which she has done. This is what we want to see. Companies that do something entirely new, open new markets, create new jobs, and drive significant export revenues, all from an Australian base, with the support of angel investment of money and advice. So why join an angel group? Well, to build a portfolio on your own is expensive in dollars, time, and the opportunity cost against all the other things you want to do in your life. An angel group offers you 3 things that lie at the core of realizing an effective, successful, and enjoyable portfolio of startup investments. When you join a group, you get access to the deeper financial resources of the collective, and thus you are able to invest a little bit less per deal in more deals than you would be likely to do on your own. This diversification by volume is the first primary risk mitigation strategy of any investment portfolio. Most people are astute enough to know they want to invest in things they understand. No matter how experienced we are or how much we know, each of us is only likely to be deeply confident in a relatively narrow range of business endeavors. On our own, we are challenged to find all the best opportunities within that narrow scope. When you join an angel group, you benefit from the depth, breadth, and diversity of the expertise, experience, and networks of all the other members. You are able to invest in a greater range of businesses than you are likely to have done on your own. This diversification by scope is the second primary risk mitigation strategy of any investment portfolio. Now, in theory, you could do both those things on your own. That is, you could make more money and you could learn new stuff. In practice, it may not be that easy. The third benefit of a group is time. The whole process of sourcing and evaluating opportunities, negotiating investments, coaching founders, and supporting exits demands a wide range of skills and a lot of time. Remember that 100-to-1 ratio? And that's just the sourcing step. When you join an angel group, you get to learn and refine your skills through practice and training with experienced colleagues. When you join a member-led angel group, you benefit from the time of all the other members. The collective, collaborative effort of the group is what gives you the time to learn, the capacity to process the volume of opportunities, and perhaps most importantly, a chance to enjoy it all, to have some fun. Melbourne Angels has invested in more than 75 companies and over 100 rounds of investment. Typically, we invest in pre-revenue ventures at a key value inflection point. That's usually revenue, but it depends on the sector and the business model. For portfolio companies that are succeeding, it's not uncommon that we support them through 4 or 5 rounds of investment. Successful companies in our portfolio are currently valued at 10, 20, and 30 times our original investment value. Our exits have included trade sales like Rome to Rio, ASX listings, script-based mergers, debt redemptions, and of course, some simple shutdowns. But how much money do you need to be a member of an angel group? Well, we recommend that you should be able and willing to invest at least 1 or 2 investments per year for 5 years to develop that concurrent portfolio of 10 investments. You may move faster. Groups like Melbourne Angels welcome you investing in smaller amounts if you are an active contributor whose experience and expertise help all of us to make better investment decisions. While at Melbourne Angels, we are sector agnostic. We have learned over time there are some investments our members simply don't want to consider, like gambling. But the thing about sectors in early stage investing is not to follow trends. Trends are backward-looking phenomena. As early stage startup investors, we must anticipate the market, not follow it. Companies typically take at least 2 to 3 years to be ready to meet the market. And in fact, market timing is the #1 reason for both success and failure. Investing in startups, the people are both the most important and the hardest piece of the puzzle. The diverse experiences and skills of an angel group are invaluable in effectively and efficiently evaluating the founders and their teams. Angel investing is focused on aligning our interests with those of the founders towards an alignment of shared future success. The angel group process and legal documents are all designed to achieve that alignment. Usually in an angel group, you decide which investments you'll make and how much to invest. The collaborative process ensures all the angels share the due diligence, invest on the same terms, and contribute to supporting the portfolio companies. In a member-led group, the members do the work of organising our events and running the group. At Melbourne Angels, opportunities are screened continuously throughout the year, and we meet twice a month to receive pitches, typically completing 20 investments every year. Our members are active in the startup community as founders, business leaders, mentors, advisors, and much more. At Melbourne Angels, our training workshops are designed for Australia, created and delivered by internationally respected angel investors. These workshops are free to our members, open to other startup investors, and to anyone who's interested to learn the art and skills of investing in startups. It's not uncommon that more than 1/3 of the participants in our workshops are startup founders. At Melbourne Angels, you will find a professional, collegiate, and ethical community of like-minded peers. Joining an angel group can't guarantee you'll make a great investment, but it can certainly help you avoid making the bad ones. It will most definitely allow you to enjoy the fun and adventure of investing in startups. So if you want to be an angel, ask us whatever you want to know.